Today I'm going to give you 2 minutes on how to reduce the risk of fraud. We've all heard the stories. That trusted office manager, that bookkeeper's been with the company for 15 years, friend of the family. They've been ripping the owner off all this time. Why? Because you gave them the keys to the kingdom. There were no checks and balances in place. How big of a problem is this? Well, to give you an idea, in 2014, there was $994 billion of fraud, and the Department of Defense budget that year was only $740 billion. And small businesses get impacted way more than big businesses. Why? Because they can't separate the duties. There's one trusted person doing everything. So let's talk about how you can help reduce the risk of fraud. The number one way you get ripped off is fake bills. The office manager pays their own AT&T bill in addition to the company AT&T bill. You look at your P&L and you see that your phone bill is a little bit higher, but how do you know? It may be just the cost of doing business. The way you do that is implement Bill.com. It's an electronic bill payment service, so you have a scanned image that's attached to each bill, and you pay your bills on your phone, so you can see exactly what you're paying and not have to have any checks in the office. The second way that businesses get ripped off is they skim cash or checks. When a customer pays you, they take it to endorse it to themselves, or they take the cash and they delete the invoice out of the system and you'll never see it. How do you stop that? Well, lock down the QuickBooks system so you don't allow them to make credit entries or adjustments to bad debt or delete an invoice. But more importantly, don't even have the cash come in the door. Outsource it to your bank or an outsourced service, or take credit cards and ACH, and you'll eliminate all that fraud. Number 3 way, and the biggest way that people get ripped off, is payroll taxes. They get ripped off by having fake payrolls. Put some extra hours in on somebody's payroll or add a new employee that you don't even look at. But one bad way is bookkeepers will put extra money into the payroll tax deposit and then claim it as a refund on their personal tax return. You, the business owner, you'll never even see it. It's not a percentage of anything. This is a great way to get ripped off, and payroll is a particular reason why you should outsource. It's so cheap with the payroll services, you should never do your own payroll in-house.